Hey guys, welcome back. In this video, we are talking about the leverage shorts liquidating, 2000% gain, the AMC collaboration and dividends, and many more in this video. First, we're taking a look at this. Over 1,500 negative articles about AMC since 2021. Ask yourself one question. If the company was already dead, why did they need to write 1,500 reminders? Now, this is something that we have been talking about for a very long time. Firstly, for a company like AMC, we constantly see media attention on AMC. And this is something we've been talking about for a very long time. But then not only that, the biggest sort of media attraction that we get is these negative articles. And they have always been about AMC despite what's actually happening in the market. We've seen countless times about how AMC is doing well, but they try and spin the narrative to talk about why AMC is doing bad. And when we see AMC going up, instead of actually covering what's actually happening, they try and talk about something that has happened in the past to contribute to AMC's success when we know that's not the case. And so this is honestly quite a crazy amount of piece of data that I'm seeing, that there was 1,500 negative articles about AMC. Potentially, it could be even more than this. But the very fact we're already looking at 1,500 is already quite a big thing for AMC. And it's why you constantly see all of these guys who are trying to put more attention on these articles, is because they're trying to push people away from AMC. You can see here, best Q1 to date since before the pandemic. While AMC market cap is at 0.58 billion, far below December 11th, 2020, 9 months into the lockdown. AMC just pushed maturities into the future, and CEO Adam says we don't need the box office numbers of 2019. And so this is another thing, another piece of data that these articles fail to mention. And we talked about earlier about how they spin the narrative. And it's like we've always said, they talk about AMC's debt issues, but they don't talk about how AMC is restructuring the debt. They talk about AMC's market cap is going down, but they don't talk about the dark pool, the manipulation that's going on. More importantly, they don't talk about how well AMC is operating and how much influx of capital is going into AMC. And these are the biggest points that really allows us to understand where AMC is headed to, how well AMC is doing, yet the media articles fail to mention this. Another big thing that we have right now is today, Tuesday, March 10th, marks AMC's third grand collaboration with Netflix in the past few months. We will show at 50 of our US theaters the first 2 episodes of season 2 of One Piece Into the Grand Line, a one-night only fan event. May there be many more such joint efforts. And so we've already talked about the Netflix partnerships in the past before, but this is just to highlight again that they need AMC. Remember previously they talked about how Netflix is gonna just completely replace AMC. There will be no need for theaters whatsoever. Yet now we're seeing Netflix partnering up with AMC to release these because they've realized how much of an effort this could actually have and how much of an impact this will also have on the industry as well. And so this is going to be big for us because we are showing a massive thing already, that there will be a big fan base that will attract more people. But the very fact that we are still needed, the very fact that what was supposed to replace us is actually needing us, it's already showing how well we've cemented ourselves within the industry and why we'll continue to have more success. Another big thing, and this is why we're talking about how these media articles don't cover this. Firstly, they don't talk about how good our collaboration is. And then earlier, we obviously talked about the debt issue, but you can see AMC's Deutsche Bank deal is a savvy timeout play. It locks in lower rates now and amid sticky 10-year yields and Fed uncertainty, but sets up a bigger public refinance later if cuts materialize. It buys times for box office recovery without diluting equity. And once again, we don't see media articles cover this. We don't see them talking about how well this is, when it is something that is beneficial for us. We've already talked about how this lower rate allows us to save over $10 million per year. And on top of this is pushing everything back later on. And we've already talked about how AMC doesn't need the box office to be like before, but the very fact that we are seeing the box office improve, the very fact we are seeing us improving and becoming more efficient, these are all kind of the cherry on top to put AMC in that position we want. You have to realize AMC's battle is not in the chart between buyers and sellers. It's in the background between the company's debt refinancing efforts and the short sellers borrowing liquidity. AMC has nothing to worry about until 2031. The situation can be very different for over-leveraged funds. And this is one of the biggest points you have to take a look at, because we've already seen how AMC is going to continue for the next few years. And when it comes to it, I believe AMC will be able to survive for another 10 plus years, another 10 plus years. For me, I don't see the theater industry to be going out of business. However, what we have to realize is that for these short sellers, they are paying an ongoing cost that's only going to get bigger and bigger. Some of the costs we've also already mentioned for these short sellers is that for the existing short positions, they have to pay financing costs for these AMC shorts. Now, if we were to use the data that's been given to us in terms of the cost to borrow, it is a small amount, but you have to realize is that this is a small percentage for a large amount of shares. And even if that is something that they can manage to do, remember how long they have to pay this for. Remember how long we have already been going. And so AMC at the very least can go to 2031. That means that these short sellers will have to continue paying these costs for another 5 years. But these costs are only going to get bigger. Firstly, there will be changes, there will be volatility to the borrow fee. But secondly, remember, not only are they paying these financing fees every day, but they're spending more money to create synthetics. So they have to spend more money to create synthetics. And when they have created these synthetics, then they have to spend even more money to continuously put these synthetic positions up to finance these positions. And so you can see how that's only going to cause them to get bigger and bigger. It's really the snowball effect that we have been talking about. And is why we believe and understand that these over-leveraged funds will be liquidated. And if you take a look at here, if you were to buy AMC stock today, and if AMC was to improve fundamentally and reach $20 a share, you will have a 2,000% gain without any squeeze. And is why I've said that I personally view AMC as a great opportunity and why these institutions are buying into AMC. Because even without a squeeze, even just looking at how well AMC can already do and the room it has for growth, even without talking about big things, we are already looking at 2,000% gain. We can easily see how AMC can achieve these things. We've already talked about the box office. We talked about what they're doing. We talked about the collaborations. We even talked about potential merger acquisitions that they can have in the future. Not to mention the investments they have made to allow them to grow as a company as well. So all of these things are just showing how AMC is a great potential about why institutions continuously want to buy into AMC as well. You can see here, 530 million float trading at $1.10 March 2026, 501 million float trading at 72.2 in June 2021. And we are seeing this, a very important data, 30% stronger box office, 3 billion less total liabilities. So why am I saying this? Because if you take a look at here, AMC was able to issue dividends during 2019 with 90% less premium large format screens, 30% less recliner filled theaters, no chocolate business, no merchandise business, no grocery store popcorn business, and no AMC dedicated shareholders. The only thing AMC had in 2019 that it doesn't show now is 700 million more in debt, along with 850 to 900 theatrical releases per year. So when we talk about the possibility of a dividend, we are looking at it getting higher and higher and higher. Remember, AMC has already said, premium large format screens is what seems to be bringing in the most revenue, is what seems to be doing very well. And now we have increased our premium large format screens. So that's only going to put us in a better fundamental position. And so with all of this, we have to realize how AMC is getting closer and closer. And we've already talked about how issuing dividends is going to push these short sellers to margin call, to liquidations. You can see here also the same example, 10 million shares trading in AMC, and this is the price action. Anyone remember when 10 million shares traded would send the stock in a $7 to $10 swing? And it's what we've said with more synthetics have been created, and that suppresses the movement of AMC. When you take a look at all of the tokens that exist out there for AMC and how more and more synthetics are being created every single day, every single week, every single month, it's obviously going to get harder for AMC to have any movement because they've constantly spent and put billions of dollars to make sure AMC doesn't move. But that precisely is why we understand when AMC squeezes, it's going to have a massive, massive movement. And this is something that I think is very true. The criminal funds that naked shorted AMC down to $0.11 per share pre-split want retail investors to believe three things that are not true. Hate and blame CEO Adam Aron for the current price, accept the current price as real, get discouraged, sell shares, stop supporting the company, and walk away. Now, what is true, and they don't want you to know, is how Adam Aron is working hard for the company, the current price is fake, the community continues to support AMC. And I want to talk about this because, once again, you guys can have your own opinions, and I'm completely fine with that. Like we've said, we're here to deliver non-biased things. We're here to look at what's objectively good for AMC. Now, objectively, you have to realize Adam Aron does not have the ability to change the price of AMC. That is just a fact, because if it does, he would change it to $1 million given how much shares of AMC he owns. That would instantly make him, the richest person in the world. But he doesn't have the ability to do that. The people that changes the price of the stock are the market makers, like we've said in the past. Now, of course, Adam Aron does have the ability to make decisions that could impact the stock. But when we take a look at the tokens of AMC, when we take a look at the dark pool, even these decisions won't matter when these short sellers are constantly manipulating. The second thing of accepting the current price as real. Now, we've already mentioned with the tokens, with the dark pool, you know what's going on. And third, get discouraged, sell shares. And is what we've started with this video with over 1,500 negative articles about AMC. And it's because of the fact that they want to disencourage the apes who are in AMC. They want to push everyone away from this. You can even see here what we saw for AMC today, over 3 million shares being borrowed. You can see it started off 400,000, went all the way up to 2.8 million, then to 3 million, and then it went all the way down to 0. Now, if that isn't desperation, if that isn't a scream for needs of shares of AMC, I don't know what is. And the very fact that they're willing to borrow this much should allow you to understand what's going on. You can also see here for the dark pool as well, 83%. And it's what we talked about with the suppression, with the manipulation. These are just data that we can use to gather of what's happening for AMC. Now, another potential big thing is the involvement of Roaring Kitty with AMC. Now, this is going back to a previous tweet he've mentioned. And in this tweet he sent, it was this picture. And on the timing, it had 109/420. Today, AMC reached the low of 109. And the fact that it's the very low and then it was then bought up, people were thinking that something is obviously going on. And now it wouldn't surprise me if Roaring Kitty is involved with this. If we're talking about a potential stake in this, I feel like Roaring Kitty would be someone who would be excited and willing to do this. Now, of course, these are all rumors, but this is something that we can obviously gather and understand. Now, on top of everything else right now, when we take a look at the macro, when we talk about the AMC investments, silver is doing extremely well. We saw silver gapping up in China once again, showing that there is still volume there. What it ends up at the end of the day for me right now is not as important. What's important is knowing that there is still volume, because without volume, we won't see anything. We won't see silver going up even more. But with volume, we know that people still want to bring silver up. People are still buying silver. The fact that the SLV share borrow fee drops to 0.35% and that there is 10 million SLV shares available, it's also screaming to me that short sellers may not want to be shorting silver anymore. And we're going to continuously seeing this go up. And the reason why silver price going up is important for us is because many apes have bought into HYMC, but also AMC is bought into HYMC as well. And this obviously affects us because it shows how well AMC can profit off of this. Another thing is that Nasdaq is trying to block a subpoena for the trading data of MMAT and TRCH, claiming it's too burdensome. And so this is something that needs to be more attentioned on, because they also want to collaborate with Kraken to launch tokenized stocks on exchange. So the very fact that they aren't willing to be giving out these data, but yet they're willing to then collaborate to launch tokenized stocks, it should already tell you what's going on. And we've always said this, tokenized stock is a double-edged sword, because firstly is that we will then see everything on chain. And this is something that now they're trying to hide, but they can't anymore when they launch tokenized stocks. But the problem with this is that with tokenized stocks, we've seen how it happened with AMC, we've seen what happened with GME, and that is something that could be repeated again. So we obviously have to watch out. Now, another few things to be looking out for is we're seeing how BlackRock's wipeout on an Amazon related loan questions hit UBS private fund sales. And so still more attention on this. And this is very important because these are talking about the swaps of AMC and GME. And then furthermore, oil prices are still having massive volatility. Now, where oil prices is going, for me, it doesn't matter. But the reason why I'm mentioning volatility is because of the short sellers who are involved and they are getting margin called by the volatility. That's how we know the collaterals are failing. As always, known as the F Financial Advisor, do take out a second of salt, make sure to do your own due diligence research, and I'll catch you guys next time.